a session on aviation. We just have 30 minutes, so it's called Armchair. We are in armchairs, but it's it's also going to be, I think a bit of a rapid-fire discussion. And because we just have 30 minutes, we're going to focus the conversation on CORSIA. Of course, there's been a lot of attention paid to the latest decision from ICAO. Lots of reactions and conversations have been had in the market over the past several weeks on this topic, and so it was a good timing to get a little group together to have this conversation here in Florence. I will quickly introduce the three panelists I have here with me today, and then we'll just get started in questions from me. And we won't have time for questions from the audience just because it's such a short session we have here, but please do feel free to come up and find us after the session. I'm sure we'd all be happy to speak to you in the next coffee break. So, beside me here I have Guy Turner, Managing Director and Head of Carbon Markets at MSCI. Next to Guy is Enrique Arderiu, Global Head of Environmental Products at Mercuria and also Chair of AIDA Council. And finally, Michael Evans, who's the Group Sustainability Insights Manager at International Airlines Group, IAG. So, my first question for each of the panelists, and it's to all of you, is what was your reaction to the latest ICAO decision on program eligibility for Phase 1? And maybe just what I should just do very quickly in case there are people who aren't familiar. So, ICAO made a decision at the end of March that came out, and it was on the Phase 1 eligibility for the CORSIA program. And there wasn't a whole lot of news in the sense that no new programs were made eligible. So it still remains to be just ART and ACR. So given that decision, I'll go to you in order. Guy, do you mind responding to that first?
Yeah, so we do a lot of modeling on the whole CORSIA scheme, and in Phase 1, so 24 to 2026, we've got a demand of we're looking at a potential demand of about 130 to 150 million tons across the international aviation sector. Under ART and ACR, there's about 37 million tons of supply at the moment. That could increase, with the sort of conditional registries, that could increase to about 180 million tons. So that sort of extra wave of registries and eligibility is really, really important. If that is the case and it comes through, then you have a potential balance in Phase 1. The problem really is only 7 million tons of that supply currently has a corresponding adjustment. So the viable supply is considerably lower than the sort of technical supply. So there's really sort of 2 or 3 challenges that remain to be done. Obviously, the inclusion of the new registries and the eligibility, there's the corresponding adjustment, and then the sort of operationalization of that. So COP was pretty unhelpful last year in terms of sort of settling the rules on Article 6, Article 6.4. We thought we had the finishing line in sight, and then all of the negotiators threw the dice in the air again, and we're sort of back to square one, which is very unhelpful. Then, who bears the responsibility of the letters of approval for the host government? Is it the standard-setting bodies? Is it the UN? Is it the host governments? So there's sort of like some pretty important contractual and commercial considerations which sort of need to come through in order to sort of cement these agreements and sort of, I think from an airline's point of view, to be absolutely confident that you know what you're signing up to. So those are my quick comments.
Great, thanks so much, Guy. Yeah, I know you raised a lot of challenges, I guess, that we're all seeing in CORSIA, including the current lack of supply. Enrique, how are you sort of interacting with that, I guess, as in your role as a trader, and what was your reaction?
So, yeah, I would say I was I was not surprised, and the reason is because if you look at the previous submissions of standards that have been approved, I mean, it's very intense, it's very demanding what basically you need in order to get that ICAO eligibility, mainly around how what they're trying to protect, apart from double claiming, is also the kind of this compensation mechanism on, how do you actually protect between your LOA and your actual corresponding adjustment. And if you looked at those submissions, they were actually extremely light touch on that. So I don't think it was a surprise. The question is, are they going to change this approach, and do they have a chance then, in the future to go through this process successfully? And I think back to kind of what Guy is saying is, from a supply perspective, it's going to be important that happens. At the same time, I think we're sometimes very simple in how we approach this. We say, well, if these two standards are approved, then everything is going to be fine. And I think a little bit to what Guy mentioned now is the actual physical part of doing a corresponding adjustment. First, it's a new thing. Like, as Guy said, it's like it has only happened in a few million tons. But it's actually very, very intense in terms of paperwork and kind of bureaucracy associated with that. And I think kind of the bigger dilemma we're going to see is, how are those standards basically going to cope with that compensation mechanism to deal with some of that risk until you actually have physical corresponding adjustments? And also, how are actually the owners of those credits potentially could use some of the existing credits in those projects for that compensation, but are those credits going to be around? So I think there's a lot of question marks that even if you have these new standards approved, that, how actually implementable in the kind of near horizon some of this is.
Great, thanks so much, Enrique. And then finally, Michael, it's great to have a sector perspective here with us today. Sure. So yeah, if you could sort of speak from that view, how did you react to the decision? Was it not so much a surprise, as Enrique said, or yeah, great to hear your views on that.
So I think, in terms of how we're planning to obviously engage with this market, it's more for is it a problem now, or is it just what is it as a signal as any problems later? And I think right now we're still reasonably confident that this is not a problem yet. This is, let's not run before we can walk. Effectively, the kind of sort of synergy I give this is almost, you turning up to a nightclub, which I don't do anymore, but the point being that the bodyguard on the door basically says you're not dressed correctly for the entry requirement. And that doesn't mean that you can't go back and change. It just means that right now we need to go through those further checks. I think the benefit of having a scheme like CORSIA, where you have a technical advisory board that publishes, it's a fairly long document, but it publishes a document that sets out exactly what it's looking to try and achieve. It has that level of cooperation, at least with the programs that are applying to be CORSIA eligible. And it has a timeline that's extremely public as well. So it's not like we don't know when we're going to see this coming back to the table. We know that we can kind of come back to a similar session like this in November, and hopefully, fingers crossed, we'll see a whole suite more of the other registries, not just the ones that are conditionally approved, but other registries that are going through the registry approval process now in the current consultation phase, be added to that list. And then from an airline's perspective, I believe we as a sector can meaningfully engage with the market that's now building around us for compliance. I think the thing is, when standing back and kind of putting this in just sort of some context, this is one element of risk in failing to kind of get this market to kind of succeed, in inverted commas. This is, combined with that is probably the bigger risk, I would argue, around that buyer protection on the LOA and on the corresponding adjustment. Even if we have all these registries coming through the process, great, but we need to ensure that there's a robust process in dealing with, let's be fair, the inevitable, that there will be the odd project, like there is in this market to date, which we've engaged with on a voluntary basis for many years, which doesn't deliver on the thing that we signed up to when we bought it. And obviously the real challenge in being a buyer in any of these markets, in particular the voluntary card market, is unfortunately it's the buyer that tends to be the one blamed for the credit that they bought, on the basis that they actually, they bought it at a time when I don't think anybody who bought credits for various projects in the past just decided they'd do so thinking there might be a Guardian article written about them 10 years later, right? So there's the sort of supply side. I just want to give some other quick context around where the other key pieces of work are that we need to progress here to make CORSIA a success outside of the supply element, and that's actually in the enforcement regime. I can't believe I'm saying this as an airline, but the idea that we don't currently have the penalty price set by individual member states is something that we need. We need that kind of stick to give us the signal, and a fair stick across the ICAO membership to make that effective. And then, of course, we need to trust, again, a level of trust that those member state regulators will enforce. When we get to January 2028 and we're asked to comply, obviously in Europe and the UK, I think that goes without saying, there'll be a very strong pressure on us to do so, because we believe that this is the scheme for the future for international aviation. But of course, we need to make sure that we bring everybody along in that space. And obviously, ICAO, to its credit, maybe to its detriment, obviously it's a huge membership. It does a huge amount of engagement activity, but at the end of the day, ICAO will have no jurisdiction over making sure that those states comply. It can say all the guidance it wants, but it's ultimately going to come down to member state peer pressure, collaboration, and actually making this scheme work from the bottom up that's going to ultimately see if it succeeds at the end of the day.
Great, thanks, Michael. Going back to Guy, so I think you mentioned some numbers which maybe came out of some of the modeling work that you and your team have done. I'd love to hear more about some of the supply and demand forecasting you've done at MSCI. How do you see that in the short, medium, and long term? And maybe if you can speak to how do you incorporate some of the challenges that Michael raised around uncertainty around LOAs, enforcement risk, et cetera.
Right, thanks. So I just gave some sort of the sort of headline numbers in the short term. In the longer term, if international aviation continues to grow at the rate it has, and we make projections on air travel demand, improvements in technical efficiency, sustainable aviation fuels, etc., and you take the baseline 85% of 2019, that wedge starts to grow. And so over the next 10 years, so phase 2, we're looking at a potential demand of 2 to 3 billion tons over 10 years. So on average, over that period of time, 200 to 300 million tons a year. Given that the market, a total voluntary carbon market, offsetting market at the moment is about 180 million, the international aviation scheme alone could increase the demand over the next 10 years from where we were last year by 50% from what we were. And that's just one sector. And that ignores every other company that wants to offset. Now, all of those would have to have corresponding adjustments. We model the price of these credits. We've also just launched the first price forecast for Article 6 credits as well. And those will become, not our forecast, but that market for Article 6 will be the reference price that a lot of this market is pegged around. The other interesting factor that we're working on, and this isn't going to be very helpful to the aviation industry, I apologize, is the quality of a corresponding adjustment probably isn't uniform. Yes, in paper it is, because you make an adjustment to the domestic inventory of the host government, but if that host government doesn't take its NDC very seriously, then that adjustment doesn't really make a lot of difference to what they're planning to do. If they do take that domestic NDC very seriously, then in theory that adjustment should galvanize a whole bunch more investment in their internal abatement plans to compensate, to bring those emissions back into line with their NDC. So there's quite a wide range of quality of corresponding adjustments. The UN hasn't really picked this up, and nobody, it's a binary sort of vision that the UN has and ICAO has, that if it's a corresponding adjustment, it's all equivalent. But in practice, there is a sort of underlying spectrum of quality, which we're doing more work sort of trying to understand. It's perhaps less relevant to the ICAO and CORSIA scheme because it all has the same compliance meaning. But if there are other applications in the voluntary carbon market where quality matters, for example, a corporate claim, an offsetting claim, then just in the way that there's a quality of the underlying project, a quality rating, which we measure, there's also a quality associated with the corresponding adjustment. But it shouldn't be necessarily something that the industry worries too much about, because it has that just, if you get the LOA,
yeah,
then you should be okay.
Great, thanks so much, Guy. Maybe going back to you, Enrique, and sort of in your in your view, interacting closely with the market as a trader, obviously both Guy and Enrique have raised some interesting, I guess, challenges for the market. I think Guy, well, maybe both of them kind of mentioned subtly sort of the link with the voluntary market. CORSIA obviously plays an interesting role as sort of this, stamp of quality, I guess. It comes through a UN scheme. There's a corresponding adjustment associated with phase one credits. So how do you see that interaction playing out? How do you see impacts on the voluntary market? With this decision, there's not a whole lot of supply for CORSIA phase one at the moment, but how do you see that evolving? How do you see, just generally impacts in the market?
So I think there's a couple of things. So you have what I would say is the trade-in market, which is very, very thin right now. There's only a futures contract really that is in place now for CORSIA, and actually you cannot even physically deliver into it right now because it's for standards that basically have not been approved yet for CORSIA. So I think, and we see that in a way, the way things are pricing, which is, you see backwardation, which kind of is interesting to see it happen because you have basically, your December 2024 contract is trading higher than your December 2025. So obviously there's an expectation that more supply is going to come, which I think is largely back to this discussion on what are the standards that are going to be approved for CORSIA, and the expectation that if there's more standards, there's more supply, and prices over time should come down. But it's very thin, so it's very difficult to get really kind of a good idea of pricing when there's very limited liquidity in the marketplace. And I think then back to kind of those supply-demand fundamentals, I think, you kind of have that angle of thinking through, is the voluntary market going to compete for some of this supply? And I would say it's too early to say because there's only so much physical, and voluntary is kind of a very physical business. You're looking for tons that are issued that you can retire. But we do see interest in it, and it's picking up. And I think part of it is because there's so much uncertainty, especially I would say on the avoidance side of credits, that, in a way, a lot of companies, back to kind of Guy's point on, actually, if your compliance doesn't matter that much, it's, you're seeing in other programs, right? It's like, you use it for compliance, you retire it, and that's it. So I think we're going to see, companies also are going to say, well, it's, approved already for a compliance program. Like, we have CCOs, for example, in the US, that's for California offsets, that are being used for voluntary purposes in the US. And again, because a lot of companies just want to avoid completely the debate. This has been a credit that is issued, according to a regulated program, and kind of end of the story. So I think we're going to have the same trend in CORSIA. I think that's going to happen mainly on avoidance, just because right now that's what you have in a way that is approved. And the question is how big, given the scale of the existing voluntary market, how much of a demand that could pull into this. And obviously then, you have the discussion whether you actually will need a corresponding adjustment, because from a voluntary perspective, you don't need it. And the question is, will buyers insist anyway on that? And I think probably the answer is no, but we need to see that.
Great, thanks so much, Enrique. And then going back to you, Michael, maybe just to sort of hammer into the detail a little bit more, how do you, as an airlines group, what are airlines looking for, when purchasing carbon credits, whether that's for CORSIA compliance or for other purposes? And then maybe just building on that, how do you see carbon markets sort of playing into your broader strategy?
Sure. So we, to be clear, we've been part of the voluntary carbon market for several years now, and our some of the airlines in the group, British Airways, probably most notably, has been offsetting domestic flights above what it's already compliant with in the UK ETS, of course, since 2020. Obviously, we also rightly, hopefully, offset the emissions used to get me in to and from Florence. So, these are the sorts of things where we still will be a voluntary player. These are things that will still, to some extent, fall outside of both the CORSIA scope and the UK ETS scope in terms of where the emission reduction is achieved there. So, we certainly, as a strategic kind of point of view, obviously now the balance of where our credit strategy is going is going to kind of tip quite considerably. It's going to go from sort of hundreds of thousands of tons up to millions of tons very quickly, and obviously most of that then being channeled through the CORSIA regulation as opposed to us sort of doing it on a voluntary basis. So of course, the big, the airline groups, us included, I think depending on how you engage with the market depends on where that liability sits in the organisation. For us, it's planning to sit at this stage. It's the reason I'm here is it sits within our sustainability team, which is what I represent. But if I had probably an airline sat next to me with a finance person maybe sitting in that airline, the likelihood is it becomes a balance sheet problem, maybe more so than a kind of mark of sustainability. Obviously, we've seen recently, a huge amount of the legal action, particularly against airlines. The recent decision against KLM being particularly notable, I think. And I think there's a real risk that we are at a point where with what CORSIA, obviously, we've got to remember, can offer that other compliance markets can't is the clearest of narratives between capital flow in the money that I spend on a project credit today. I can trace that euro, that pound, whatever, back to the project that I've invested in. So the offset that I've ultimately bought from the project, the location, what it's trying to do, how it's trying to do it, obviously all withstanding, hoping that the quality of that is proven through the methodologies that are used. If I pay into EU ETS or UK ETS, it goes into a big pot of money. And how that money goes, yes, it goes into Innovation Fund and other pots in Europe. Obviously in the UK, they don't necessarily hypothecate anything, so the reality is it's not very clear where it goes at all. But it's a far harder narrative for any airline to suggest that they're doing, they're actually doing work to reduce emissions now, which we can't simply reduce on our own. So we've got to make it a very real, the reason why we have carbon markets, why we were active in pushing for an international scheme as well, to be fair on the same routes around the world to cover, 90% of international emissions, hopefully by the end of the decade, and obviously noting that most of aviation's emissions are international. The split is in favour of international emissions. This is the opportunity now to put a price on those emissions to arguably pick the low-hanging fruit in abatement that exists outside of our sector, and that is exactly what this scheme should really recognise. But unfortunately, I think the challenge for us as an airline group today is being confident to make a claim, or to even say that we've gone out and invested in any such project is becoming an increasingly narrow scope. On the one hand, we're going to be pushed by regulation to disclose levels of reporting through things like the Corporate Sustainability Reporting Directive, among others, to say what we're doing. At the same time, the various green claims codes and everything else are going to sort of be pulling us to a position where we almost can't necessarily make any claim. And obviously then we don't want to stray from greenwashing to green hushing, which is absolutely as bad. I don't think there's two ways about it. It's an as bad outcome, because if you don't know what companies are doing to actually mitigate their emissions, how can you trust that the market's delivering what it's planning to deliver, among other things? So, yeah, sorry, that was a bit of a long-winded way of saying we are in the sort of stage of sort of strategic planning. I think probably most airlines at this stage are exactly that. And because of some of the compliance challenges I mentioned earlier, I think the initial strategy will be certainly more in the kind of dip toes feel rather than go out with big volume. I think I would certainly appreciate that, the kind of ask, I guess, of everybody sort of sat in this room is we are keen on our side to think of hopefully a diverse portfolio, whether that's diverse within a particular project type or whether that's diverse across project types. I think we'd ideally be looking towards the latter, but we'll see how we go with the supply. And then, of course, I think the actual sort of statements that we need to make is the longer piece of work that we need to develop, and that probably will require further sort of policy advocacy to try and find a sweet spot. I think we've got to find what that sweet spot looks like, where we can make the public realise that this is not either greenwashing, green hushing. This is a regulated scheme we're required to comply, but it actually does good things, and that's what the whole point of putting these things in place is for.
Yeah, Guy, go ahead.
I know we haven't got long left, but your original opening question about the announcement from ICAO, or the lack of announcement on it, I would just like to give a shout out to CORSIA. Do we have any representatives from CORSIA, from the technical body or anything? I know there's a lot of impatience and frustration with the pace at which things are developing, But I would much rather have a well-designed, thorough, transparent, coordinated, well-governed process than something that goes off half-cocked. If you look at the troubles now with SBTI, you look at what's happening with the revision of the methodologies with VARA. Even if you go back to 2008 to 2012 in the EU, where we imported 1.6 billion tons of CERs, crashed the price for 8 years. You make mistakes in these markets, you will regret that for you can regret that for a long period of time. So patience over the next month or year or so is well worth the long-term journey. If we get this right, airlines will have the confidence to sort of build their inventory, supply will increase, countries will work to sort of build the corresponding adjusted supply. It will happen, but temper the impatience and let's get it right is my recommendation.
Great, thanks so much, Guy. I think that's a nice note to end on, really. A bit of a positive, vision of the future and also some nice remarks for ICAO, I think, and sort of like the importance of getting this right. I think that's, an important message. I think it's been interesting to hear, across this panel, a lot of themes that have picked up across this conference, right? Like the convergence of compliance and BCM, the concerns around claims and reputational risks, and what is the, right use of credits. I think it's been great to hear from Michael from an airline's view. I think it's probably important for us in the room to remember that sector isn't a monolith, and so there's going to be lots of different approaches depending on sort of the position of the airline and sort of how they view carbon credits and the role in their broader strategy. And it's nice to hear that, the narrative piece is important to IAG. So thanks very much to the whole panel. Really appreciate your time and your insights, and thanks to all of you who made it up here for this session. So we'll close here. Thanks.